Have a good one, Joe. Take care, buddy. What's up, guys? What is up? I gotta turn on my other device here. And so what's up, guys? Welcome back to Bitcoin Advisors channel. My name is Chris here. I hope you guys all have had yourself a lovely little Thursday. Yes, today I was being reminded, I've been watching an interview on Yahoo Finance from Ray Dalio, and what he said was pretty darn impactful. And who's Ray Dalio? The founder of Bridgewater, the largest hedge fund in the world. This guy is arguably the most successful investor. He's been phenomenal in predicting the markets. And yes, he looks like an older version of Mr. Rogers. Anyways, being interviewed on Yahoo Finance, what did he say? He said, quote, "Cash is the riskiest asset, and global debt monetization always sends the gold price higher." And what was interesting is what he talked about. There's three forces that are shaping the economy right now. One is the long-term global debt and the monetization of that debt. Two, we've got the wealth gap, which is eerily similar to 1933. And three, we've got the rise of China, a challenging superpower just like the United States. He said it's not just a trade war, it's not just a technology war, a geopolitical war, it is a currency war. And Dalio says the Chinese renminbi, the new digital yuan, is going to play a huge role in the new economy in years to come. So how do these forces affect the world economy? So he went back in history 500 years. He studied the Dutch Empire, the rise and fall of the Dutch Empire, the rise and fall of the British Empire, and the rise and now decline of the US dollar. And he says this is most comparable with 1933, the Great Depression. And what he says is, back then a progressive liberal, Roosevelt, confiscated all the gold. And then we had 1945, the war ended, and we had these years of prosperity, and peace and prosperity is where you can make some money. And that's when, stocks go up. And, but there comes a time where the limitations of the central banks, and they basically can't easily produce money and credit, and the monetary policy is not working. And we know that's what's happening right now. And he said there's three forms of monetary policy. One is interest rate policy, like we saw in the 1970s, Paul Volcker. Two, we had the 2008, too big to fail. They bail out the banks. That's the second phase of monetary policy. And then the central bank prints money and they buy financial assets. So the Fed printed money and they bought mortgage-backed securities and bonds. And I would say they helped China buy a lot of our assets. And the third phase, the same thing that's been happening for thousands of years. Guess what they do? What do the central banks do? They just print more money, just like we saw the $2 trillion bailout for the recent banking collapse. It's a $2 trillion special kind of drawing rights fund for banks that are failing and they need to cover depositors, right? So he said the same thing is happening right now. The government's printing a lot of money and they are going to do it in the form of central bank digital currency. So yes, now's your time to own some Bitcoin. We're going to talk about the important price levels to be watching out for. And as I was saying yesterday, I think it's a little bit, it'd be a little bit more cautious to, wait for the next higher low. So I'm going to get into some Bitcoin price action here and see if I can't help you guys out in looking at some of these prices, and I'm just going to get into it right now. So here we got Bitcoin on the weekly time frame, and I'm going to throw up lo and behold, our favorite indicator, or one of our favorites now, called the Gaussian channel, to give you an idea on how high this run could continue to go, or if we're in the midst of a pullback right now. Let me just find it here, the Gaussian channel. There she is. So this is the weekly time frame for Bitcoin. So if we can close anywhere above the mean band, it would suggest that we get a free ride to the top side of the mean band. And credit to Eric Crown on this one, but he pointed out on the 5-day time frame for CMEs, we did have a closure yesterday above the mean band, which could give us a free ride up to 33,300. So how much are we talking from current price? That's 15% higher from where we're at today. So as long as we're closing above that mean band on the 5-day time frame, I'd say that is more likely than not. Additionally, Bitcoin on the 5-day got a nice strong close and a free ride above the mean band. So best advice for beginners is something that I preach to a